Hey, what up, everybody? It's Rhett Weaver from Intraland Utah, just doing your Tuesday update. Just want to kind of give you an idea of what's going on in the market as far as with interest rates, what's happening, what people are talking about, what to kind of expect. So over the weekend, there was some really good information. Atlanta Fed president, so Raphael Bostic, he spoke. He basically said the Fed is just done doing large rate hikes and that they really only want to raise rates about another 100 basis points. So we do know here in December, they're going to raise it about 50 basis points. It sounds like on the February 1st announcement, potentially it could only be 25 basis points. And so what that really is stating is everything that they just did in the last, basically 8 weeks, 10 weeks has been working. They're seeing inflation really come down. Obviously, the year over year is helping us out at this point. It's not hurting us anymore, which means we're starting to see kind of a downtick in interest rates. And that's kind of what we've seen since the Fed announcement, earlier this month. So kind of want to go over some charts with you, kind of want to show you what's happening here, just so you guys are well informed and can kind of stay on track as far as what they believe is happening. Right now, we're taking a look at mortgage-backed securities. So right up here, I've had some questions on this. This is not the current interest rate. We're not at 5.5% right now. So just to kind of give you an idea. What this is just mortgage-backed securities to kind of give you an idea. Anything in the green means rates are getting lower. Anything in the red means rates are going higher. And so what you can kind of see here is this resistance that we've been kind of running into, which is actually really good news because what we kind of saw on that Fed announcement, and then we've just been bouncing back and forth every single day on this line of resistance, which is actually really good news because once we break it, we really got quite a bit for the upside, which means we're going to see a downward trend in interest rates again. And so anytime that we're kind of hitting this, the odds are that it's going to break through at some point. With having multiple days where we're sitting here hitting it, we're really close to kind of breaking through and having rates continue to kind of come down. Let me show you what's happening in the 10-year Treasury. This is just the chart a little bit backwards. In the 10-year, we want to see red. We don't want to see the green, so hopefully that's not confusing. Mortgage-backed securities, anytime it's in the red, it means rates are going higher. Anytime it's in the green, it means rates are going lower. 10-year Treasury is complete opposite. So again, as you can see, there's kind of this barrier here, this break, and this is kind of the level or the line that they believe it's going to get to, which means if this breaks and goes green and gets through that, then it means interest rates are getting obviously a little bit lower. So just to kind of break that down for you on some charts. One other thing that I want to chat with you guys about, because what we spoke about was these rates are basically still going to be refinanced. What I mean by that is a lot of the servicers know that these just aren't going to be held, so they're not really moving rates extremely fast to the downside. What they're doing is just making stuff a little bit cheaper, the rates to be a little bit cheaper for the affordability of our clients. So what I really wanted to break down to you guys one more time is on a $400,000 purchase, if we go in here and basically change the rate to, let's just say, if today's rates are at 6.75, I know I got to do one more for a rate buy down. I kind of want to show you whether we do a price break, which means instead of having the seller pay closing costs, we're just doing a reduction in the sales price. If we do a permanent buy down, which means we're taking the seller paid closing costs and just moving that interest rate, let's say from 6.75% down to 6.6%. And then if we do like a temporary buy down, so this would be like a 2-1 buy down is kind of what we're showing you here. So I want to kind of break this graph down for you and kind of show you guys what the benefit of these three differences as you present offers to sellers, and in the short term, what kind of makes the most sense. So here, if we kind of take a look at the lowest payment for the next 10 years, basically what it's stating is there's no red, which means the price break is sitting higher than the permanent buy down and the temporary buy down. So right now, if we believe interest rates are going to come down, we know for the next 4 years, a 2-1 buy down is the best payment and best situation for your clients overall. If they feel like they're going to hang on to the mortgage longer than 4 years, then the permanent buy down is really going to be, what's best for them. But the price break, basically bringing the purchase price down and not getting any seller pays, not getting a lower rate in any way, shape, or form, is not the best way to kind of go about right now. If we kind of go to a cost benefit over a 10-year period, and even if we shorten this up even just a little bit so this graph just makes a little bit more sense, the cost benefit is still almost 1.5 years, not quite, but 1.5 years. The cost benefit is the 2-1 buy down. And then that's where we kind of go into this price break. So when you take a look at the overall cost benefit for your client, The price break in the next 3 years, if they're just going to sell that property, that price break is by far the best way to go about. But if we're talking about hanging on to the property, gaining a little bit of equity, just looking for mortgages and potentially doing a refi, that's when we go back to this graph and kind of show you, over the next, let's just say 7 years, we know 4 years, the best thing to do is that 2-1 buy down, even if it comes back up to the note rate where it originally started. So if you guys have any questions on that, feel free to reach out. I know that's a lot of information. Basically, to kind of boil it all down, everything looks awesome. Seems like we're going to continue to get a little bit lower rates. Seems like the rates are going to start coming down. And again, they're predicting in the next 6 months that rates should be down around 5, according to everything that's happening right now. Thanks for watching.